All right. Hello, everyone, and welcome to another episode of the Of Impact podcast. Today is an especially exciting one because we have the infamous Chris Bodnar that Shan and I have talked about so many times on so many podcasts to so many people. He's one of our greatest friends, and we've just been really looking forward to introducing him. So without further ado, here is Chris Bodnar.
To finally be able to do this together. I've been looking forward to it.
Yeah, we've been super excited. Chris has a very impressive history, one that I've tried to share with a bunch of people before, and it's too hard to explain. It's just so impressive. So I'll have you go ahead and kind of share your experience, Chris, where you got started, what you're up to now, and yeah.
Sure. Well, these things are always difficult for me. I don't like hearing myself talk or talking so much about myself, but that's what we do when we introduce. And but I have had a great career. You never know quite where you're headed, through the process. But looking back, it's been really fulfilling, and it's been kind of exciting too. I would say, the broad overview of my background is really one of, Wall Street type experiences, a variety of them over the last 25 years. And most recently, it's led me to the point that I've started and advised startup boutique investment banks over the last 10 years. Very early on in my career, I was underwriting private debt and equity transactions for venture capital companies. It was a while ago, but some of the big names that we know today, even Amazon, was just new then, and they were building out their infrastructure. And so I was looking at transactions for their distribution centers and so venture capital type investing, which led to private equity investing, a group that was an investor in one of the portfolio companies. I got to know them because they were local to where I lived at the time, and they recruited me to come over and start working with them. So I worked in private equity after I was doing a stint for several years in the VC market for very early stage startup in biotech and life sciences and high tech companies. I went over to the private equity side now and started investing in those types of transactions. So that was really early on in my career. Very interesting work, but I knew I needed more, I would say, background and training, I guess, build a resume if you could. So I went back to business school full time. And I didn't really want to leave, but it just seemed like it was the right thing to do. Otherwise it would take too long in a part-time construct. So I went back to business school full time, and that was really great because it gave me a lot of opportunities that I wouldn't have had otherwise. In fact, I was given, I don't know if you guys know this, or if I told you before, but I was given what was known as a full graduate assistantship to go back to get my MBA. And that just meant that they were going to pay for it all, which was nice in itself. But the department that gave me that graduate assistantship was the Connecticut Small Business Technology Center. And so that was, my first also foray into advising small businesses, small and medium-sized businesses. A lot of them were startups, but I was in Connecticut at the time. And the Small Business Technology and Development Center was mandated by the federal Small Business Administration. So every state has one, and they're just set up in different ways. And so it was pretty cool to work with them and travel around the state and support their business advisors. And I got to participate in a lot then. And
oh wow,
I learned a lot about. Yeah, it was really good. I didn't know then what I would be doing now.
Yeah, I don't think we did that. That's cool.
No, we never knew that. That is very cool.
Yeah, and they all still exist. So like right now I'm in North Carolina, you guys are in Florida, and wherever our listeners are listening from, if you were to look up in your state, they would all each have a small business development or technology center that founders and entrepreneurs can tap into for support as they start and grow their companies.
Oh wow, yeah, that's helpful. That's helpful for the listeners to hear too. I don't know how we've had a million conversations and I never heard that. That's cool.
I remember the one time we were meeting with a client, and it was just hearing your background again, where you went to school and the stuff you did. You're like, oh yeah, I remember how impressive that was.
I know. Funny. That's just it. That's why you're the best person to share it, because it's like it's it's just that it's like, what haven't you done? So when we met with that client, it was really cool just to hear it all again. And even now hearing more, you just feel like you learn a little more each time we talk with you, which is exciting.
Mm-hmm.
When did you decide,
Yeah,
or what made you decide to get into that space? Or like, how long before you actually went back to business school did you kind of decide, hey, I want to, go in a different direction?
Well, just the going back to business school part was just something I felt like was, if I liked the work I was doing, I needed to have, in particular, like in the private equity world, because when you make acquisitions and when you purchase portfolio companies, a lot of times those skills are needed to run them. All facets of owning a business, from the financials to the marketing to the strategic business development and merger and acquisition, all that. And so when you go back to get an MBA, that's kind of the broad training and educational background that you acquire. But I didn't know exactly how I'd use it, at the time. It was actually through internships or an internship I was really thankful for in between my first and second year there, that, I had been involved in a lot of transactional work before then, but it really catapulted me into the whole realm of merger and acquisitions when I got the internship at the Hartford, which, for those who are listening, the Hartford's a publicly traded insurance conglomerate that does life and property and casualty insurance. It does a lot of other things too, like it has an investment management company. It has ancillary lines of business like bankruptcy services. And one of the things I was doing was doing merger and acquisitions for all of those business lines, and also doing strategic private equity investing for the Hartford, which kind of kept me in that whole realm, which was really cool, because it gave you exposure to, what it's like to work with the CEO of companies or the heads of business lines, and to work with investment bankers, and to be thinking in terms of, private assets, but then you're also a publicly traded company. So everything you do has to be accretive for the value of shareholders. And so, it really gave me a wide range of experience that I could tap.
That's cool. Yeah, I can imagine that's probably a world that most people never even like peek into. It's a whole different ballgame without working like with the Hartford, or a company that size, or I know some of the other ones in your background, like, deal wise, what's some of like the largest deal size that you worked on to like the smallest? Like, I mean, it sounds like it's quite a window there.
Yeah. I mean, at that time they were all pretty large. When we were making private equity investments in startup venture-backed companies, they could have been in the order of like, $5 to $10 million. That was on the buy side. When you're looking to sell things, those can be in the hundreds of millions of dollars. Once I eventually moved down to Charlotte, and I started work again with a firm that was doing leveraged buyouts and providing the debt capital for those large transactions. Some of those deals were, quite honestly, the largest deals in U.S. history. Like there was one deal called HCA, which was a hospital company, and the Frist family. They used, a lot of people, maybe even some of the listeners, know who they were out of Tennessee. Bill Frist was well known for being in Congress. They sold that business to a conglomerate, a consortium of private equity investors run by Bain and KKR, and that deal was in the billions. I think at the time, and it was six or $7 billion.
Oh, wow.
But that was just the nature of that deal.
Mm-hmm.
Over time, it's funny because I've trended lower as I've gotten into working and owning my own mergers and acquisitions advisory practice, and done deals anywhere from $1 million up to $100 million. So more on the lower end, kind of in that $10 to $25 million range.
That's the upper end for many people. That's a big number. But when you're used to billions, I guess it is a little bit little different. Do you notice just yourself like leaning one way or the other? Like what do you find more enjoyable, or like working with the larger, conglomerates, or like more with the individual business owners?
Yeah, it's a lot of people think that it's kind of sexy being able to say you do big transactions, and throw around large numbers. But you work with people that are, in a lot of ways, they hold equity in the company, but they're management really. And I think what I found really rewarding is to be able, over the last decade or slightly more, to really be working with people that own these companies, and the type of work that you're doing with them is really transformational to their lives. I mean, there's just no other way to say it. They work their whole lives building these companies, and it means everything to them that they can monetize it at some point in their life, or that you can help them even get to that point. And so it's really worthwhile and rewarding, I think, from that perspective. And it always has been. So from that standpoint, I would say smaller deals and, relative to the work that I've done in my past is more rewarding. But it's funny because I have that skill set in my background, I always say, like, the market tends to find you. And so I've even gravitated towards the higher end of the size spectrum. I would say $5 to $25 million is still a pretty large company for a lower middle market business. And it's still pretty transformational from a life and business standpoint.
Yeah, absolutely. I know me and Alicia can agree with that. It just, where we've spent years building Live Infinitely, and then like not really, like, we always had talked about it, like, oh, we're going to build it and sell it, but like we didn't actually know how to sell it or anything. We just knew we could say it out loud, but like actually going through that process, and that was life changing. I mean, what we've done since then, and we've actually been able to capitalize and really and go back to kind of get our time back and go back to enjoying life. So no, it's it makes a ton of sense of what you're saying there.
Do you guys remember at the point at which you decided you wanted to sell? I think something that I always talk to potential clients about is they don't know, maybe they haven't gotten to the point where they know they want to sell yet, and sometimes it's because they don't know what they want to do next. Right. Do you guys remember that point for you, what that was?
Oh yeah. I think we were in Nashville at a mastermind meeting, and we were talking with them about the size of our business and where we were, and they were like, would you be interested in selling? And they asked us, and they were interested in buying Live Infinitely, and we're like, what? Like, no, this is our baby. Like, why would you want to buy it? And that was like that. But then, like, one of our mentors there, we asked him, we're like, do people sell businesses? Like, should we do this? Like, because it just hadn't really crossed our minds yet. This was making us money. It felt like our mission, our purpose. And he's like, oh yeah. He's like, your first business, especially. He said that he had built up a business or two and then sold it. And that's what helped him get the skill sets and the cash to build the next one better and free up his time. And that was that moment. We were in Nashville in our hotel room, started Googling, like, what's it like to sell, and what's the whole process like? And that was really when we made the decision. And I feel like then pretty shortly after is when we found you in our big Google research of figuring out how to sell, who to talk to, and trying to figure out that process.
I remember that. You guys were in the position where, I mean, you could tell the story, but you weren't exactly ready at that point. You knew you were thinking about it, but like, what point were you at when we met?
Yeah,
it was, yeah, we were
Amazon based still, right?
Yeah, we were just starting to make the transition over, and like, we knew at that point we learned we could sell it, but we had like no idea as far as valuation and like questions and what was important, like, thinking about it of like a product where you're looking at margin or size or something like that. But then when it actually goes to the business, we had no idea what a buyer would be interested in or what mattered to them. So I mean, it was probably a year and a half or so before we sold. I think that we started talking and like meeting monthly and planning and just making sure that we were on the right track, and then going back and fixing QuickBooks and like going back and like, honestly, it changed our mindset, because just thinking about different things that we could do, where maybe an example would be like getting more inventory, where like when we like learned that interest could be an add back. So you're like, okay, well, we can, maybe try to grow that, or just things like that, where you just kind of always started to think from a different angle of like, how can we set this thing up to sell it versus, just today.
Well, that's when we even learned what EBITDA was. We're like, what are all those letters? What does that mean?
Stand for.
Yeah.
Yeah.
And we're like, oh
Yeah.
wow, and all the ad backs. And I know we had
Yeah.
met with a few advisors trying to figure out, who to sell our business with. And when we came across you, Chris, it was kind of like that moment of like, because it is such an emotional thing to do, which you don't even realize it really is. Like, but then like when you find somebody that like really connects, and like the way you like helped problem solve and meet us where we were at, and it just felt like we could have somebody to really talk with about like full transparency of our goals and what we were trying to do without any expectations or pressure. Like we could just go to you. And so it's like when we found you after like meeting with a few advisors, it was kind of that like oh my gosh, like weight off your shoulder, this very complex thing that we were like, this is like, we don't really know what we're doing, to feel like we found a friend in that space.
Yeah.
It's just like a huge moment for us, and just knowing that we could rely on you.
Yeah.
And the rest is history from there on
Well,
all.
that's a big part of it.
Uh-huh.
It's a really big part of it, because you can't really convey at the start what ends up being the case by the end, that you really become part of a team through it.
Yeah.
And, you get the sense that you can't do it without me. And the reality is I constantly need to be working. We need to be working together so that I can get what you want done. And, by the end, it can be, like you said, Chad, it could even be a couple of years, and you end up really working together closely for that amount of time. I was telling a guy, we had recently closed his transaction about a month ago. And I said, yeah, you kind of go through a little withdrawal, because after the deal closes, I'm still here, for anything that comes up, but the intensity of all that you're going through
sure.
kind of subsides.
It
Yeah,
was, I remember one of our like wrap up calls after maybe a month or two after closing with you. And it was like a big celebration where we were talking, and it was just like we felt like you were the only person in the world we could like share this like huge moment with, like. And so it's just, we wanted to keep talking, and I don't know, we talked for like 2 hours. And after that phone call, it was like kind of sad. You're like, will we talk to Chris more? Like, like we met with you weekly, and it was just like, you become so close. And luckily, like we maintained our friendship and found other ways to work together. But it definitely is that weird withdrawal of like, and that's why it really is important. That's why I tell everybody I've ever consulted with and talked with about business and exiting, like finding that the advisor that like really you connect with is really important. It's one of like the most important things, at least for us, just because we knew you always had our back, and that's just really important.
Yeah, we've always struggled to hire, and we have had some really good people, but you just struggled over the years. So it was actually nice to have somebody that like we didn't have to worry about. Like as we were going through it, like you just knew that it would get done and get done right. And then like when we would get an offer or an LOI or something, then it was like, oh, okay, then we can go over it. But it was just nice to like not have to feel like we had to go out there and sell it or actually do that. So it was definitely the best sleep that me and her got for like literally 7-8 years kind of deal. Like the day after the transaction closed, you're just like, it was definitely exciting.
I guess it kind of like pulls back into what you were saying earlier, Chris, about those large transactions are really exciting and stuff, but like that impact that you saw you made in mine and Shad's life, like where like our entire life had just changed completely. And it was such an emotional experience of like, and that you were such a huge part of that. Like I could definitely see like how that is like rewarding and fulfilling to work with those founders on that level.
Oh yeah, it totally is. You guys, I remember, were very focused on, just the dream that you had of what Live Infinitely meant, but why you came up with the name and what it meant. And so selling the company provided resources to be able to do that in a different way. And so
that's true.
Yeah, I remember, I sometimes use that as an example when I tell people, it's not so much the money, it's what it enables you to do in your life, which, I think for me, and I know for you guys too, is a big motivation behind the concept of impact.
Yeah.
Because, life's not just about money. Money solves a lot of problems. but it's what you can do with it, or with your business, or with your opportunities, that really, not just allows you to be enriched by it, but allows you to have an impact on others.
Was the biggest asset we got back,
Uh-huh.
truthfully, like, because we had our
Oh, yeah.
warehouse and we had all of that. So just that time again was the thing that, like, it's worth more than just about any amount of money to actually, reset that level. And there's been so many people, and I know, other clients that we've referred to, or that it's like they never really thought about selling the business. It was always just a paycheck to them. Like, they started a business
Yeah.
so they could be their own boss, but then it was like it turns into a lot of work, and it can be very rewarding.
Yeah.
But like, they just never thought that that was even an option. And then when you start to calculate, hey, I can do this, and then I can take that money and roll it into whatever I want to do, and like create that life you want. Like, when you start,
Yeah.
when those doors open up, there's no closing. I mean, you can't like,
Yeah.
you
Mhm.
can help. But no,
I just
that's very cool.
I just did a coaching call earlier today, and the guy asked me, he's like, "Can I ask you something? Please don't be offended." And I was like, "Okay." And he's like, "So you sold your business." He's like, "Why are you still working?" Like, that's a great
Right.
question. A lot, my family
Yeah.
asks us that all the time, but it's exactly what you're saying, Chris, and like why we developed the name of Impact. It's just like, life is like money is definitely great. And when we sold Live and Play, that like getting that lump sum, that feels great. That's an exciting reward for sure, but it is so much more in just that, like, all of us are just very ambitious and very, like, we want to
Yeah.
go out there. And now that we've learned the skill sets we've learned, like, pass along those skill sets to other entrepreneurs and help make meaningful impacts in their lives. And to be honest, you're a huge source of inspiration for that, because like the impact you made in our lives by helping us with that transaction. And so that's why, for a few years after selling, we were seeing what we could do to be helpful and pass along our knowledge. But when we came up with the concept of impact, to help businesses create businesses of impact and therefore, impact their life, it just felt like such a natural way for all of us to work together. We always wanted to. Throughout the past few years,
Yeah.
like I said, that last call with you was like, oh man, like we got to figure out how we can stay in touch, and just knowing that your values align so much with ours in the sense of wanting to make meaningful impact on people's lives. Like, it just felt like the most natural way to form our partnership through Of Impact.
No,
Yeah.
that makes sense. And I think people, like, also, they just don't realize, like, we actually, there's a certain level you enjoy business, like you enjoy interacting with it, learn it,
Yeah.
like it actually
Hmm.
becomes, I want to say, a hobby, but it's something that if you, and especially when you, after you've exited, and it's not that same level of demand or requirement, like it's just an actual and enjoyable experience. But I mean, I guess that's like probably the
Yeah.
next question is what made you decide to, change over the years, kind of like where your background has, started taking you, and, kind of what has made you kind of want to do what you're doing next, or what does the, the future look like for you?
No, I remember when I was younger, like in interviews, they'd ask you, where do you want to be in 5 years? And you'd come up with something. But like the older I get, I'm like, I have no idea where I'm going to be in 5 years. But it's funny because like there are things about, I mean, what ends up happening is like the things you do in your life and where you find relevance and having impact on others, it kind of becomes you. And so from that standpoint, I just see, this is what I see myself doing over the foreseeable future. It could be the next decade or two. And I don't feel like it's anything in my path that would stop it. And because like you said, Chad, I really enjoy it. And, I get to work with what I call kind of like the Hall of Fame, like the Hall of Champions, people who get to the point where they can monetize their life's work or sell their companies, or even just an asset out of a portfolio of companies. It's because they were successful and they were good at something.
Mhm.
And not everybody's the same, right? And not every company is the same, but it's really fun to have that variety. But like right now, I'm working with a company in the industrial space, and I recently sold a company that was an e-commerce business. Very different business models,
Mhm.
but they're both equally successful in what they've done and what they've built, and so that's fun. And so yeah, I mean, I think the older too, and the further along I get in my career, I do enjoy the concept that we've been talking about, having impact on others. I think you get better at what you do if you're willing to continue to work at it and refine your skills. I think you guys have found that to be true. You're still kind of young, and yet you're very good at what you do and you're getting better. I think that we can have an impact, so, the saying goes, and I think it's what's become meaningful to me is, having an impact isn't just about doing more, but it's about focusing all of the relevant energy in the right place. And so you become better at what you do, you become more efficient at what you do, you can help others be the same way. If there's, anything good, that we can pass along to help someone who's already great become better. That's what I see.
Oh, that's cool. No, that makes complete sense. It's funny working in so many different spaces, and honestly, it took me a long time. I think probably and some help from the dictionary or Wikipedia to understand what all you do inside of an advisor service, because it's more than just exiting a business. There's a whole lot more that what you're capable of and what you actually do working with brands, right?
Engagements and clients take on lots of different forms, but in some form or fashion, there usually is a preparation phase or an exit planning phase where, a lot happens. You can be really good at what you do running your company, but it doesn't necessarily mean that it's ready to be bought. And I've heard it said, and I like to say myself, that the best companies are bought, they're not sold. I think that's just really wise. And it can take time to get yourself, to get your company, to get your mindset in the right position to be bought, to have, be the best version of yourself, of the company at the time, when the time's right, while still having, enough upside opportunity for a buyer to see that growth. And so, there's a lot that goes on. There's many areas that we would focus on. I think, as you can imagine, you touched all of them in your experience too. You've got finance, making sure operationally from a financial standpoint, the business is tight, where there are opportunities to improve profitability, the cash flow, just making sure that you have terms right. There's also the area of human resources that, depending on the company, can be a heavy lift, making sure that most buyers of businesses, especially when you get to a certain size, aren't looking to also work in the business. And so a lot of founders are at a place in their life where they've always worked. You guys work hard at whatever you do, and you did that with Live Instantly. I mean, you two were driving a forklift. That's what, got you burnt out in a lot of ways. Mm-hmm. But being able to extract yourself from the company really makes it the asset that the buyer wants it to be. Because, most buyers aren't wanting to, hop into the driver's seat of a forklift and start, even though they probably want to know how to do it, they don't want to do it. So, right. From a human resources perspective, getting the company in a place where it can be transferred and keep running without you is a big focus, an area of focus.
I'm sure that's a huge help for a lot of brands, because there's family or generational businesses where, they're intend to pass it down, but then their kids don't want anything to do with it or something, so they have to replace themselves.
Right.
Or like us, where we didn't really focus or have time to do that. We just were like, oh, we'll do everything and then we'll sell it. But I'm sure that's a huge weight off of many people's shoulders to actually have somebody to help them bridge that gap to whoever's going to acquire it.
Yep. Yeah. And all of that, there's layers that go below. So whether you're talking about finance and all that goes into that, human resources and all that goes into that, there can be retention agreements, incentive compensation, making sure that the cost structure is right. So those two areas, finance and HR, intersect, making sure the cost structure is right so that you have people, running as fast as they can and behaving like they're owners of the company, but and being compensated well, but also keeping the company in a safe position so that if, during market cycles, the cost isn't over bloated. And then, another area that we focus on a lot are legal contracts. Owning a company, you're well aware, you get yourself into lots of different contracts with different parties. It can be a supplier, it can be a partner, it can be a company that it could be a lease. So you have a landlord or a lessor that you're responsible to, and all of those contracts come to bear when you're looking at a transaction. And so, I like to joke, I'm like not Doogie Howser. I'm like not a doctor, but I play one on TV. I'm not a lawyer, and I don't ever want to play one anywhere, but I have to read tons and tons of contracts.
That's funny.
Do
you ever?
And then just the last part is the market. So valuation and like the actual market that as it goes for these assets.
Do you ever do? I think it depending on size of brand and or business, but do you ever do like I guess partial exits? Where they'll sell 40-60% of the company, but still retain either an ownership or some sort of portion there.
Yeah, a lot of I think it just depends. I think a lot of what I've done, I would say the vast majority of what I've done, especially in the realm of larger small businesses and lower middle market companies, have been what they call change of control transactions. So these founders are selling a majority position in the company, and that's because the buyer wants that control, even though they still might be glad for the owner to stay around and have a significant role in the go forward period. So change of control is usually a big factor, but there are minority transfers. A lot of times that's just for the sake of growth capital and making sure that the company is positioned well and bringing in resources that it didn't have previously. It could be distribution resources. There was a transaction I did once where the buyer wanted to purchase a minority interest in the company, and the seller was glad to do that because they got access to a resource that would expand their distribution capabilities well beyond what they were capable of doing. So that's just an example.
It's like strategic.
So you're like Mr. Wonderful then, huh? Or Barbara, or
right.
Speaking of which, I guess I read somewhere that Cuban's done with Shark Tank. Speaking of that,
Oh,
I feel like he's
leaving, I think, at the end of the season. Didn't I read that this week?
Yeah, I think it was this week. He sold the Mavs too, so I don't know. Maybe there's an open spot. One of us can hop in there somehow.
I vote Chris.
Yeah, I vote Chris too.
Yeah. You can be the next Shark.
I think, and I know this isn't on every deal, and it really deal specific and stuff. But I know one thing that I found very interesting when we got into that space was like the concept of like an earnout or something along that line, where as we sold the brand, like there was still room or there was still potential to recognize some future growth or kind of what we had worked to. Like, do you see that? I know a lot of people, they don't, maybe they don't know when to exit because they want to get every dollar, but like, do you see that frequently or, with that kind of moving or forward projecting kind of growth ability?
Yeah, I think when you talk about like different hats that I wear, that you wear inside of an advisory practice like this, being a psychologist is one of them, and it can be a challenge. Yeah, it's like keeping people grounded, not getting too emotional, not letting the swings go too far.
So true.
Yeah, exactly. And then I think one big one though is, for people to understand that you will make out better in many cases by owning a smaller portion of something that grows into a bigger result than you will by just hanging on to a larger portion of a smaller business that can't grow as much. And that's the case for the earnout or for the retained equity position in the company that you used to own that you sold. And it's a big opportunity. I think what you realize is, the party that you connect yourself to, that you sell to, matters a lot at that point. And even that, playing psychologist, I can't tell you the amount of times where, there's this wonderful buyer that's coming along. And I think the thing that's on a founder's mind or an entrepreneur's mind is, am I going to have a job now? Like, is this going to be my boss? And the funny thing is, like, that's rarely the case. In fact, I can't even remember a time when a buyer ever started to treat, the seller like they were their employee now, but it's something to overcome. Yeah, mentally.
Yeah. We had that same question because we ran the warehouse and, in the transition phase, we still ran the warehouse, but like they left us alone. It was like, it was the easiest thing. You woke up, went to the warehouse, shipped orders, and it was a very smooth. It wasn't like they were, breathing down your neck and you felt like they were kind of micromanage you or something like that.
That's what I always tell people too about what made working with you so great is your psychologist abilities for sure. And like you were very real with us in our expectations of everything. There was never a moment that something like you overinflated an expectation and then it wasn't met. Like that was you put this is what we should expect and then it would always surpass it in our case, not always, but like you just helped us keep our expectations in line and where it should be and what we're a good babysitter of our emotions throughout the whole process for sure. So you do have a lot of hats.
Yeah.
Sure.
That's true. When you agree to take on a deal, or like you kind of look at it and say, yeah, okay, I think there's something here. Like what I know it's not a guarantee, but what kind of like success do you see there when you do after you do your initial audit and give your first kind of like, this is what I think. What's kind of your like the success rate that you see in something like that?
I know it's as you can imagine when you're at the point at which you're getting engaged to someone in for this type of work, you don't know them as well as you will. And so what I found is that a lot of times trying to get them to be as open with you as possible and have, like you were saying, Alicia, those like real discussions, those heart to hearts about everything, about like, what do you want out of this? Valuation expectations. What are you thinking in terms of what's next? A lot of times people will hold those cards close to their vest and you are in a lot of ways working against something that's you think but I think that's where my background on the buy side, I make a distinction between the buy and the sell sides. The sell side is selling companies and selling products to the market. The buy side is acquiring them and buying them. And so in my work as a private equity investor and as an investor of high yield leverage debt products, I've broken down hundreds of different types of businesses and business models, and seen tons of different capital structures and investors and founders, and I try to evaluate my own clients the same way that I believe that the buyer of their business is going to evaluate them. And so when you start out that way, you can kind of ask some hard questions and really get to the heart of what's going to be a challenge for a buyer to overcome. And from that perspective, you can really have some honest discussions about valuation expectations. And if those things align, all I can hope to convey is that I'm just being honest and truthful, and in one sense, if we don't ever become, they don't ever become a client of the firm, I still have always felt like, in those prospective discussions, they were still getting a great service, because at least if they trust you, they're getting, truth that they hopefully can take and still work with.
Yeah, no, I know for us that was huge because I don't know exactly when we like signed the contract, before we sold the company, but we had like months and months of phone calls and education and help, and like we didn't sign any. So it was just comfortable to know that like you had our back, but it wasn't like this used car salesman feel where you know what I mean. Like there was
Yeah.
months of actually working together, and then it's like, all right, we feel like we're ready and we could do it. That was nice because most places are not that way. It's like on that first phone call they want a deposit or and it was an enjoyable experience for sure.
Yeah. Well, and you asked about like success rate. Ivory soap is probably the only thing closest to 100%. Death and taxes, I guess 100%. How the adage goes. But I think something that I've had a really good track record with over the decades I've been doing this is if we commit to a process, and at the outset of that process, if you're a client of mine and we agree on what the outcome is going to be, like for example, you're willing to accept a deal that looks like this, I have a near perfect track record of getting that. Now, it doesn't mean necessarily the deal is going to complete, And that can happen for lots of reasons that are even outside of our control. I mean, I had a really great track record through the coronavirus pandemic, but you can't do anything about, a weird, virus popping up in Wuhan,
Right.
China and infecting the whole globe, and
Right.
that'll have an impact on things depending on where you are in your deal process.
Right.
But I have a near perfect track record of getting a transaction or multiple offers and transactions that my clients say that they are looking for.
That makes sense. I know I don't remember the exact number we ended up with, but there were 3 or 4 like viable options for our deal, like where, and it was interesting. And I think that's probably one thing that I really appreciated going through that is like each deal, because it's not like selling a business isn't like just a single product. You list it for $20, somebody gives you 20, you call it even. Like they'll all have different caveats to them or earnouts or stabilities and so like that was a whole new world. And that was just nice to be able to talk through each one of them with you. Cause like there were some deals that had aspects that we liked more than, maybe the one we accepted, but like you kind of have to evaluate the entire deal. So it was really helpful going through that and having multiple options, so that was
That is true.
that
I
was really
remember
good.
we would break down each one, like, okay, this one we would advise for a year plus this plus that, but then you really helped break through, because you, like just what Shad said, like you never really realize the different pieces of offers. Then they can be so unique and so different.
Yeah.
So you going through them with us was very helpful in that sense.
With post COVID and kind of like there was a huge years of e-commerce transactions in particular got moved online. It affected physical businesses that, depending on what state you were in, things like that. Where like how do you see kind of the status of, kind of the overall economy right now, or
Yeah.
just kind of the business market as a whole? I mean, where do you see it at this moment?
It's definitely at a different place, and it's gotten here pretty quick. Just looking back over, you say COVID, I mean, we're coming up on 4 years. It's crazy since the start of it, really. Look at what's happening. I mean, inflation, not to get kind of macroeconomic on us here, but like inflation has been a huge factor. I mean, good thing for savers, because you see rates going up to address it and to cool the economy, at least in our country, and elsewhere in the world. But, in terms of what products cost, especially as a business owner, if you're selling product, you're buying them at higher prices, you're having to pass those along. There's only so much you can do. You're having to readjust. And what is interesting is, while the capital markets and the Federal Reserve in our country have been adjusting rates to address inflation, you still have a pretty healthy employment market. And what you haven't seen a lot are bankruptcies in our country, increasing at the rate that they would during a real recession, even though you have interest rates climbing. So, there are high profile bankruptcies happening and there's businesses going out of business all the time. But from a transaction perspective, high rates should have an impact, both, because private equity firms are bringing in dollars, but they will leverage them to make acquisitions. Family offices do the same thing. High net worth individuals do the same thing. Like I think the cost of debt today on an SBA loan, if you wanted to buy a $5 million company, is probably somewhere in the 11.5%, 12% range, which is a lot. That's expensive. So the cash flow from these businesses need to be able to support that, and it just impacts valuation. So, but I think as long as employment in our country can hold up, I think we'll probably be okay. Not good for home buyers, if you're wanting to buy a new house,
Yeah.
But I think that, just you just have a healthy business, kind of climate that, again, like I said, the best businesses are bought, they're not sold. So if you have a good company, I think there's always going to be an active market. And while, and this also gets into the psychology, Shad, which is, and I think we talked about this too, just as time goes on, the future's always uncertain.
Right.
The right side of the chart, the right side of the time graph is always empty, and you never know what's going to happen. And so if we're seeing deal multiples today, depending on the type of business we're talking about, somewhere in the 3 to 6 times, let's just say, maybe even upwards of 8 for some of the best ones, there's no guarantee that those multiples are going to stay there. So you can either grow into the valuation that you want, or if you grow into it, there's no guarantee that the multiple is going to be there, or the valuation, profile is going to be there at the time that you want to sell it. So there's always this trade-off, and there's always this risk-reward analysis that goes on.
With the multiple, I know that was one question I always had when we were going into selling, but for like our listeners, could you explain like what that is?
Yeah, I guess to kind of boil it all down, a simple way to think about it is, your business, if it's good and healthy and sellable, produces cash flow that a buyer would want to acquire, either as an investment or as a portfolio asset. And the multiple kind of represents the number of years, in one sense, that they're paying you for that cash flow. And there's all these other intangible things that go into the analysis, like the stability of your cash flow. Meaning like over time, how consistent is that? If there are contracts associated with your company, how sticky are those contracts, and how far out into the future do they go? You guys saw this with Live Infinitely, what's the lifetime value of a customer, and what does that profile look like? For a software company, that recurring revenue stream and the amount of churn in the business can affect that multiple, and how many years into the future they would. But I guess from a more technical standpoint, it's also reflective of the risk. And so maybe people hear, in a financial terms, like the discount rate, which would be the amount of risk that a buyer would assign to that cash flow being achieved at a certain valuation. And so that's what the multiple really is. It's an expression of risk related to the asset and the cash flow that comes off that company.
Perfect.
That makes sense.
That's helpful.
And I guess one of the most important things is can be complex, but that's where like you're looking at every single deal that, if a client comes in front of you and you're kind of tailoring it to their business. You're giving your opinion, looking through all that. They don't have to go through and try to calculate that all off themselves. Like, that's right, where your kind of specialty comes in there. With the, talking about the multiples and stuff like that, I think there's even somewhat of a misconception right now of like, depending on what station, that either nobody's buying anything. Interest rates are up, but that doesn't mean people stop buying as a whole. Like, when's the most recent transaction, like business transaction, that you've closed?
I closed a deal a month ago. I think it was almost to the day, and this was a multifamily office that saw opportunity in the market. And I think that's the thing. Like the market goes through phases, and right now, in one sense, you could say it's a buyer's market. But the point that I was making earlier is we never really know until you get into the future and look back. But I closed this deal about a month ago, and the valuation on that transaction, because of the buyer and how they looked at it and where they saw the strategic opportunities, was 8 times the annual cash flow on the business, which is honestly, it's unheard of right now. That's a very high print from a multiple standpoint. But I think something else that's very relevant to multiples is beauty's in the eye of the beholder, and not every buyer sees the same opportunities. And so you find one that's willing to pay more because you can sell them on things that are really specific to their situation. And that's a lot of the art behind what I do and we do in this work. That it's not just a mathematical formula, that there's actual art and selling that goes on to try and help people buy something that is private.
That makes complete sense. And it's like it just goes to show, like, November, that's essentially early November 2023, and interest rates haven't been that high in a long time. And you close a deal at an 8 times. So it's not. I think it's just a big misconception of people of like, oh, interest rates up, markets down. Well, it's not necessarily the case, So,
Right. Yeah.
but no, that's good. I think kind of you take a couple minutes and talk about like what made you decide to, or when we all started talking and like doing kind of going down this road together, what made you decide to kind of come into kind of where you are now, and what made you make that decision, and kind of what do you want to are you looking forward moving forward?
It was your dog Remy. He's a really
I knew
he's
it.
a fun dog. No.
The most important thing I would like to
Definitely
point out, it's the forever debate if he's my dog or her dog.
And
He's in my office right now.
They both.
Oh, he
He is right.
started here. I'll have you know. So
Who's walking the dog in right now? Yeah.
Exactly.
That's so funny.
Yeah. Well, I think it's there's a lot to it, but I think in a nutshell, we already talked about the concept of what it's like to create and to help people realize a life of impact and to have that.
Mm-hmm.
I think one thing about you two and about the work you're doing in the is that you're very good at what you do, and you don't just talk about it, you actually do it. And you're coming from a place where you don't just do it today, you've done it before, and you've done it for many others before, and that's a track record. And what I find in my work is that when people come to me, a lot of times what they're needing and through the discussions is they need time to grow and to develop into the best version, the company of itself that it possibly can be. And I've developed a lot of great relationships over the years, but you're always outsourcing that in a sense. You're always telling them what they can go find to help them, or bringing somebody in that that's all fine. That's fine and good, and you don't always have all the solutions in-house. But I think knowing you two and being partnered up with you two, there's a tremendous opportunity in the transaction market to be able to say, not only do we think that if you do these things, this is what your business can transform into and what it will mean in a deal, but we can actually say we can do it too. And so one of the premises of and characteristics of our work is that, all of our interests are always aligned, us with the owners, in every way, but even more so when you're actually helping them to grow and to do the things that you guys do so well. And I think one thing that I've really been trying to encourage you guys in, and we're starting to see it, is, your background is in consumer product e-commerce, but a lot of what you talk about and the principles behind what you do in your work has relevance to all other types of business models as well. Right. And so that's really exciting. That's really exciting.
No, it is. It's the same for us, because it's like we've been able to help brands grow, and we've done it with ourselves, or even the one that that we're owners in right now, that like setting new high scores every day. But then it's like, okay, without this kind of partnership, then you grow it to where you want. Then what do you do? So now with this and of impact and impact advisors, it just flows through. Like, terrible analogy, but coming from my mechanic background, it's like I'm the guy turning the wrenches, building the car, and without a good paint job, it looks terrible. So like, you're painting it, it's rolling out the door. It's like, it's that final thing, but one has to have the other, truthfully. And anybody who's really just randomly hired an agency or something like that, they know, like, you're not always going to get the same attention as you would if it was either one, a team member, or two, somebody who actually treats it like it's their business. And I think, going through our sales process with you, like, that's how we always felt it was. And then when we opened the Of Impact agency and really start working with clients that way, it's how we treat every single client. It's like it's our business, and like,
it is.
We like care, and it's like you almost feel like you're back in Live Influence in some aspects, because like, yes, we're getting a paycheck, but it's like it's more than it's more than money. It's a challenge. It's the like, it's like then having a meeting with them, and they're like, I've never seen sales do this, or, you know, and when they actually get that excitement and appreciation, like
Yeah.
it's enjoyable. It's actually fulfilling, you know, we really enjoy that.
It's just like it's the perfect marriage in a sense, because like throughout the years that we were helping businesses, everyone was so intrigued by the fact that we sold, because that's like I feel like more and more business owners are learning that that's something that you can do, and really not should, but should, because it's really exciting to do.
Yeah.
They always ask about that, like what was the process, and that's one thing that most business owners have wanted to know from us. And so now, like having this partnership where we can help the business grow with what we can do with, and then kind of pass them along, and you help them have a meaningful exit. It's like they never have to go find, the other piece of the puzzle. And so it's just
Yeah.
it works so well in that sense of like we know exactly who we fully trust to pass along our
Right.
essentially, because when just like Shannon
Right.
said, when we take on a client, they become like very intimate partners, and we would want to only trust the best that we can pass it along to.
Yeah. Well, I like what you just said too. Like, it's not just work; it's like a challenge. And I know you two are, and you're like me. It's like we're highly competitive, and there's only one speed, and there's only one view of this, and it's like it's ours, and it's ours to win. And I think that's what it's not just our business, but it's like that's how we approach the engagement. And I think our clients appreciate that, because a lot of times when you own a company, it's just and it's like it's just you and your initiative and your drive that's carried this thing as far as you have. And when you meet people that are willing to and that can keep pace with you and help you accomplish something so tremendous, it's a refreshing experience. And honestly, you know, it really just strokes the competitive, nature in me, whether it's just to be able to prove that, we are the best option for entrepreneurs, or to get a deal done that is a challenge. It's always a challenge, and it feels really rewarding.
And actually, you know, and single-handedly, like you're impacting these people's future, and depending on the size and how wise they are with it and stuff, like you're impacting their future, their kids' future, their grandkid, like I mean, legitimately,
Oh yeah.
it's people don't realize what a successful exit or planning or proper, handling that phase. You can spend 15 years building a business, but if then you give up and you don't really plan the rest of it out, the difference is that it could be night and day difference by just,
Yeah.
that one different thing. So it is, I'm sure there's a lot of people that, like, if you look at the deals that you've done and look at the family trees and how that's affected their kids, you know what I mean? There's a lot of people that
Yeah.
really probably
That
would.
was a good nickname, Shad.
Yeah, right. I think that one's trademarked, so I
Trademark.
don't
We'll
want
have to
to
find
get
something
too
out.
much in that. We'll get you something, but no,
Yeah.
but that's very exciting. No, I think we're a little over an hour here, but I mean, I think it was great to actually get you on here, and we've talked about you so much, and there's so many people that we've told that they need to meet Chris, or talk to him and stuff. So this has been really, really enjoyable.
And it definitely won't be the
Thank
last
you.
time either.
Yeah.
Chris
Yeah.
will be on here a lot, and we'll deep dive, I'm sure, into lots of really interesting topics. And as you can see, Chris has a brain like like no other. So we'll dig into it and pull out some cool topics
Thank you.
future podcast episodes.
If there's business owners or somebody that wants to have a one-on-one, or get some more questions answered, or really kind of like explore their particular business and an exit, like what's the best way to get in touch with you? Where's your or if they just want to see your background in print, like
Yeah.
what's the best way to do that?
Yeah, it's good. Well, we've got the website, which is ofimpactadvisors.com, all one word, ofimpactadvisors.com. There's a short bio there. LinkedIn, you can find me on LinkedIn and see more of my background that I was talking about earlier. And then you can always reach out by email at chris@ofimpactadvisors.com. And I think those would be the easiest ways.
Very cool. Well, thank you so much.
Yeah.
Cool.
This was always so much fun chatting with you. So we really appreciate you being on today.
Thanks for putting this together. I think you're doing great work, and that's another thing that I'm just really looking forward to is the outward facing, content and just help and resources that we can provide people. And I think it's just because of the work that you're doing with Shad to making all that possible. So thanks a lot.
Appreciate it. Well, cool.
Absolutely.